I need to be there ahead of this decision because it'll happen quickly and you won't be able to put on your position and the market will move against you so fast. I am extremely optimistic on Bitcoin and Ethereum over the next, call it 24 months. What I find intriguing about the nature of this correction, if you want to call it that, or the potential of a recession, is that it is in the foreshadow and then the shadow of $6 trillion worth of printing. And so you think about what occurred during the pandemic, which is unprecedented in any economy's history, to take that much and print it in basically 30 months and not to expect inflation. Well, of course, that's why we have what we have right now, a 40-year, new high in inflation. But at the same time, if you could figure out the printing presses were going to stop, you would be forecasting a new leg up. And here's my thinking on this. There's two bills right now in front of Congress. And so one is a watered down version of Build Back Better. They're calling it anti-inflation, what everybody knows is a joke. This is very inflationary, but it's a spend over 10 years. So that's one attribute of more printing, which would maintain an inflationary stance and, of course, keep the Fed raising rates, which is not good for equities. And then there's this interesting situation in the chip bill where we're going to spend billions of dollars. It's, again, free money from a helicopter going into the Midwest to try and catch up with what's happened in our lack of ability to manufacture semiconductors. But basically, you're supporting idiot management. That's basically what happened. You're picking a sector. Taxpayers are not getting anything from it other than just to give their tax dollars away to idiot management. And I don't mean disrespectfully, but there's management that can execute and foresees the future, and that's why they're good managers. And then there's idiot managers. So you could say many idiot managers guided manufacturing out. And why I bring this up towards determining the future of the market is every midterm election, and this starts in about 2 weeks, okay? It's November 8th, by midnight, November 8th. And this is my thinking as an equity participant. There's at least a 50-50 chance that both the House and the Senate flip to the other party. I don't even want to get into politics, but the point is there's a lot of unhappy campers in America today based on inflation around food and energy. They're really pissed. And so when that happens, and it's so close, it's November 8th, this is the good news for investors. After that night, there will be total gridlock in Washington for the next 2 years. There will not be a single piece of legislation passed. It will be impossible to get anything done, and that's a great thing. That's a wonderful thing because markets love Washington gridlock. And I think whether you want to say it's PE expansion or earnings expansion, and it may be both, we're going to continue this leg up. Now, not 30%. But if you have an option between making 8 or 9%, including div distribution and yields on the S&P 500 at a 17 to 18 PE, or getting 2 to 3% on long duration treasuries, I think that's a no-brainer. So bottom line is, so I make it very clear, bottom is in. We're going to be flatlining for a while we wait to see what the Fed does. But if we get what I think is going to happen November 8th, Katie, bar the doors. Gridlock in Washington is a wonderful, wonderful thing. They have no idea. And so they put these crazy policies in place. The more you keep chipping away with stupid policy, the more damage you do long term to your economy. Now, this 15% minimum tax does not help equities. It doesn't. It's just going to have companies contort and try and figure out how to get around it. Bottom line. The IRS, 88,000 more agents, that's just going to hassle small businesses in America. Not a good thing. So bad policy, the whole point is when you have a situation where Washington can move policy, more than 50% of it is bad policy. When you have total gridlock, they can't do anything. They can't damage anything. Listen, it's important to have government for many different services, but not for making economic policy. They're really bad at it. So that's why I point out, once you shut down the policy machine, markets get to move back up. and I think in terms of allocation and distribution of your own portfolio, I don't care who you are, there is a place for fixed income. And the challenge we're having right now in pricing in risk is, in a bond situation, if you get it wrong, you have to wait a decade to get your principal back. That's not a good outcome. And you could go shorter duration. But what's bothering me as a bond guy, that's how I started my career, is what BlackRock is doing right now. Instead of buying fixed income, and remember, they're trying to put to work billions every week, they're buying U.S. apartment buildings instead. They're reallocating away from an actual bond, a covenanted instrument, and they're buying fixed income based on distributions of rent. It's not just that. We're going to get regulation. Listen, we were supposed to get a policy just on stablecoins reviewed this month. They pushed it, and I'm talking about now on the Hill in Washington, they pushed it to September to consider it. You got to remember, there's Haggerty, there's Loomis, there's Toomey, and Toomey is going to retire in January. He wants to get one piece of policy done. He wants to get stablecoins regulated. I want to get some kind of payment system for my global businesses when we're transferring cash. I want to use USDC between here and Geneva. We index. I have an indexing business. So we're constantly, every day, taking US dollars, ACHing it over to Zurich. They charge me a fortune for that. It takes 36 hours sometimes. Then they nip me on the FX trade when I go into Swiss francs and buy a Nestle or a Roche or whatever I'm buying to index it. And then they screw me again on the way out. I could completely eliminate that with a payment system. And everybody knows that. So there's a lot of utility. Second reason you got to be bullish here is this. Both sides are supporting this, Dems and Republicans, because it makes the dollar, if you get a U.S. stablecoin policy in place, it makes it the default payment system of the earth. Not the Swiss franc, not the euro, not the British pound, not the Chinese yuan, the U.S. dollar. So this is coming back to the House on the floor in September, and it may be the first piece of legislation that provides the launch ramp for more crypto policy. Now, you know there's a war going on between the SEC and the other regulators, a turf war on crypto, but you can't deny crypto is here to stay. In fact, I believe in the next 10 years, it'll be the 12th sector, the S&P. You go teach a class of MIT graduates in engineering right now. I do guest lecturing there. 1/3 of the class are entrepreneurial. Where do they want to go? They have no interest in working in any of the 11 sectors of the economy. They want to work on the blockchain. They want to be in crypto. You can't pour that much intellectual capital into something and not have great outcomes one day. It's like being at the beginning of the internet. And I'm talking about the smartest, brightest men and women from around the world saying, screw everything else. I want to work on crypto. Wait, but you've got to remember, we've been talking about the merge for 5 years. And
okay.
So, let me be the skeptic. This is my largest position right now. ETH has moved up and put it at the top of the heap of my 32 positions. I'm a skeptic till I see it happen, because you got to think about who loses in the merge. And if you're a miner right now, you're not loving this merge idea. And there's a lot of capital tied up in that. And so when it happens, I'll believe it. But we have seen this thing punted down the road 5 times. So what makes you so confident it's going to happen? Get policy. Will they get somebody in Washington to say that's okay if you're a public pension plan? They need the policy on crypto in the sense, even if they only regulate Bitcoin and Ethereum. And so many people in the crypto world are against regulation, but I say that's false. If you get regulation, you get more capital. You've made a great case right there for why we want policy on Ethereum. But right now, if we had policy on Bitcoin, I swear to you, the price would be $60,000 in 2 weeks. The point is, I'm trying to get ahead of the day, because we're all agreeing that at some point we're going to get policy. I need to be long before that happens, because that's the reward you're going to get, is when that stuff gets indexed. And whoever gets to index it, the demand for at least Bitcoin and Ethereum out of the beginning is insatiable. It is insatiable at the sovereign and pension level. As for all the skeptics that are, don't like crypto, they're going to watch that asset move into an indexed price, which I think is $60,000. I need to be there ahead of this decision, because it'll happen quickly and you won't be able to put on your position, and the market will move against you so fast. I am extremely optimistic on Bitcoin and Ethereum over the next, call it 24 months. You get the Republicans on this, they're way more pro-crypto. Most of the bill initiatives are coming out of red states, and I don't want to be political, but if you get the House flipping, they'll put that on the agenda. But don't expect every token to be regulated. They're going to focus on the market capitalization and say, here's policy on Bitcoin, here's policy on ETH. I think you want to be long after November 8th. I mean, everybody's got to speculate on what to do here, but you've seen the winter at the bottoms. We're slowly crawling out of the toilet here. Your portfolios are up, 20, in some cases 23%. I mean, our 20% position went down to 15.2. That's pain. That's pain, my friends. And our desk was saying, what do we do? What do we do? I said, we do nothing. Where we know we're in this volatile asset class, and we're going to have to wait for some policy. That's why whenever I talk about crypto now, I'm pro-regulation. I want the sovereigns backing me up with a bid every night. Yeah. I say this is a good thing for the market. Scraping the patina off the bad actors, the idiot managers, the over-leveraged, unsophisticated traders. It's important to do that because it makes the rest of this ecosphere very, very stable. And the more you get, I love it when these guys using leverage who've never done this before, I'm assuming because they blew their brains out the old-fashioned way, they're eliminated from the market. The lawyers will pick over the carcasses in litigation. That's okay. But these players are out of the market, and that's important. The DNA of the remaining survivors gets better. That's my whole point. Don't you think at the end of the day that it's okay to arrest that guy? Why? He's messing with the primal forces of regulation. And maybe he feels he's a crypto cowboy, but he just got a whole bunch of arrows in his back. And if we have to sacrifice him, that's okay, because we want to have some stability in that institutional capital. That's what we've been saying all hour. And I think we're getting to that stage now. Maybe we're in the third, fourth inning towards that. But I'm tired of this crypto cowboy crap. I want to get involved in a regulated place where we can bring billions of dollars to work. I don't need to be a crypto cowboy, and I don't want to be one because I work in the regulated world. I'm tired of that narrative. When you go to Bitcoin 2022 last year, and certainly 2023, the first day they had to open up the first Wednesday just for institutional interest, even though none of them owned any Bitcoin. They had 1,500 institutions at the keynote there. I mean, it was unbelievable, the interest, but they're not going to touch it while, the crypto cowboys are riding the fence. We got to get rid of this crap.